Alrighty. Dun, 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 dun. All right. Testing. I guess it's starting to work out. All right. So this is episode 1 of the Lion's Share podcast. And in today's video, I'm going to be talking about how to become a professional trader, how to start trading like a pro, basically. So what I'm going to do, basically we're going to start off having like segments talking about, again, this is like, I'm new to this. All right. So I want to start off going over segments about how things are going to, how to become better. And then we could take it to Q&A and we could do all that good stuff. Basically, whatever a solo podcast usually does, that's what I'm basically going to be trying to do. And the goal is to do this. Hey, guys, how's everyone doing? What's up, Michael, Robert, Seven Sisters? How you guys doing? So the goal is basically I want to do this a couple times a week. We're going to be going over stock market news. We're going to be going over crypto news, stock market news, sports, pop culture stuff, anything that really we like to talk about. And I'm just going to give my thoughts on it. And then the goal eventually is, as I continue doing this often, then we could get some cool guests to come on board, and then I could interview them, and then we could all learn more from those guests as well. That's basically the goal for this podcast as well. And we're just going to grow, and we're just going to see how things go. And I'm excited. So, yeah, man. So that's basically what I want to do. So just a little bit about myself. If you guys are completely new, my name is Hamza Hamid. I've been a trader on the market for almost 13 years. I have a vast plethora of knowledge in options trading, in crypto trading, in day trading, swing trading, and long-term investing, thankfully. And I've been very successful on social media as well as trading as a whole. And this podcast and everything is going to be a way that I can share my journey and share my insights with everyone as well. So I'm excited. So basically, right, today's topic is going to be essentially how to get started, how to avoid common mistakes, and how to set yourself up for trading, essentially. Hopefully this is a little bit better. It's a bit further away. Next time, I guess I could put my headphones in. It won't sound too bad. Calistro, but thanks for telling me. Just take a look at this, but yeah, so essentially, right, if we're looking at the market currently, right, that's the most relevant thing that we can take a look at the moment is the current market, right? Over the past few days, especially over the past few weeks since January began, I was trying to tell people to be extremely careful about being chopped out in the market. It's very, very risky to have a complete bias in one direction. So, for example, if the SPY, right, we're just going to be talking about the S&P. For the S&P 500, for example, if you saw the S&P 500 at 607 a few days ago, this morning we ended up dropping to 598. So if you went long at 607, this morning we were at 598. What is the innate thing that we want to do when we see price movement jumping up and down? It's to follow the momentum, right? You want to follow the momentum. But the issue with choppy market environments is that following the momentum does not work. So if you saw strength, for example, we all saw the strength heading into the SPY at 607 recently. If you went long into that strength, this morning you would be down. The market was down. From 607, it was down almost 1.5%. So this is not really a conducive, flowing, fluid market. Does that make sense? So when the market is not fluid like this, it becomes much more choppy. Gets you cooked, exactly. The market becomes much more choppy, and it's not safe at all. Much better? All right, perfect. So it's not safe, which is why we've had a lot of swing trades so far. We've been taking a lot of swing trades recently. Every other day, we change our bias because in this market environment, it's very difficult to have a bias consistently. Overall, in the market, yes, I am bullish. I do believe the market is going to end up making new highs. But does that mean that I'm not going to take a good short opportunity when it arises? We were just short on Tesla. We went short Tesla from 385. We took profits on Tesla at 330. Tesla gave a great shorting opportunity. Just because I'm bullish on the market doesn't mean I'm not going to go short when I see a good opportunity, right? We got almost $60 to the downside on Tesla. So that was really, really amazing. And not to mention, we were long on the SPY and the QQQ. Then we went short on the SPY and QQQ. This move overnight that happened to the downside, right? We were short. So we were short overnight. 2 days before that, we were long. So we played it to the upside. And then we played it to the downside. And this is just the way that you have to deal with the ebbs and flows of the market. How you doing, Scooby? Salam. So this is just what we have to deal with, the ebbs and flows of the market. It's not going to be a complete, easy market environment. And that is, we have to be able to adapt to these different market environments. Sometimes it becomes very, very easy. You could easily, oh, wow, long opportunity? Great, I'm going to go long. And then it just continues rising for God knows how long, days in a row. You don't even need to think. You could just go long and it ends up working. But in this sort of market environment, it's not like that. As soon as there's some sort of strength that shows, it reverses back down. So things like this, you have to realize it's made to make people get chopped out. It's not that safe, and it's a really, really funny market environment. But thankfully, you have to be able to adapt to different environments. Thankfully, we're doing that really well. We have a 36 out of I've taken 38 swing trades so far since January. 36 of them worked, which is a 95% success rate. So thankfully, that's been working really well. Can't complain there. Can't complain there. That's the most important thing to do. So I guess, for everyone that's watching, since this is the first episode, I'm assuming, everyone that is watching is already a trader and you guys already have knowledge about the stock market. But since it's the first episode of the Lion's Share podcast, we don't know how long people watch this in the future. 5-10 years down the line, if someone goes to the first episode, they're going to see this. So I just wanted to start off by showing you guys and explaining how to become a professional trader, how to educate yourself, where to learn, where to start learning, all that good stuff. So first and foremost, it is very, very important to know what market you want to trade. Do you want to trade the stock market, the Forex market, the futures market, or the crypto market? There's different markets you could trade. The bond market, if you're into that, you could trade that as well. But it's very, very important to know what market you want to trade. Once you know what market you want to trade, you need to understand what is leverage, what is margin, how to properly have risk management. These are different topics and subtopics that you need to search. Risk management is probably the most important thing for any trader. Risk management is the difference between it could very well be the difference between being a successful trader and a non-successful trader. For example, if you have a small, for example, this is one of the things that I started off with. One of the biggest issues that I had starting off was a lack of risk management. So I would start off with a $500 account. Every single trade that I took, I would throw my entire portfolio into the trades. Eventually, yeah, we would stack up. 500 quickly turned into 3,000 or 4,000. Great. But because I threw my entire portfolio into every trade, all it took was one singular trade, and the portfolio would be down 50, 60%. I didn't know that there was earnings on a stock, for example. The trade would reverse back, and I would lose 50, 60, 70% of my portfolio because I didn't understand to look for earnings. So at first, when you are trading at first, there is just so many intricate factors that you don't even know exist. Does that make sense? I'm sure we've all realized, like, okay, I'm trading the market right now. Great. Wow, what's FOMC? What does that mean when Jerome Powell speaks? What are Fed minutes? What is the Fed conference? If you're trading and you're in a position, 2 p.m. Eastern hits, and the Fed is going to be speaking, the market drops. How are you even supposed to know that if you have not experienced the market properly? There's so much that we don't even, when you first start, that you don't even know exists in the market, which is why, as you are beginning as a trader, risk management is so, so important. You cannot throw your entire portfolio. You cannot throw a large percentage of your portfolio even into your trades, because all it takes is one trade, one misstep, one lack of understanding that you're in a news cycle or some sort of event to occur, and then boom, your portfolio goes kaput. So that's something that you need to really, really focus on, risk management. And the other thing is, it basically goes hand in hand. You need to start small. So if you're starting small and you have proper risk management, you're able to ride the wave and basically figure out what works and what doesn't work without losing a large chunk of your portfolio. There's a lot of people that have a lot of money saved up, and they're like, I want to start becoming a trader. I want to trade full time. How do I do this, Hamid? I have 100K saved up. I have 50K saved up. I want to become a full-time trader. I don't want to work anymore. You don't use your whole 50K. You don't use your whole 100K when you're first trading. You use a small portion of that money to test out with. Once you're testing that money out, once you're testing the waters to see what works and what doesn't work, once you've perfected your risk management, once you understand how much money to put into each trade, once you understand stop losses, once you can perfect your entry and exit points, once you've proved that you're capable of trading a small amount of money and being profitable with that, that's when you can start adding more and more money. Anything prior to that is completely gambling, and doing that is you're throwing your money away. There's no reason to do that. So definitely, guys, start small. Understand when you first start trading, you're going to lose money, and you need to have risk management when you're trading. You're not going to automatically just start printing money every day. It's gonna be a journey. And what you need to realize, especially when you're on this journey, is, for example, basketball players. Even the best basketball players. Steph Curry, for example. Steph Curry misses shots. You are not going to make every single shot. You are not going to make every single trade work. There's going to be trades that don't work. It comes with the program. It comes with the math. The math is just the math. You're not going to make it, every single trade is not going to work out. What does that mean then? If every single trade is not going to work out, it's our job to make the math work in our favor. So if we are patient to start taking profitable, if we're patient to take high quality setups, if we're patient and we have discipline and we have proper risk management, proper stop losses, proper account sizing and position sizing, then we allow the math to work in our favor. But if we throw 100% of your portfolio into every single trade, that's how you lose your portfolio, buddy. And that is not safe. So whether it's day trading, whether it's swing trading, whether it's long-term investing, all of this applies the same. You cannot throw your entire portfolio into anything. So I hope that makes sense. The other really, really main thing that you need to have when you're first starting out as a trader is you need to have discipline. Discipline comes in different facets. It comes in it doesn't just come in the risk management portion or the portfolio management portion. You have to have proper emotional discipline as well. Trading. So for example, you know how working out, like 70% of having a good body or working out is like 70% of it is just your diet, right? For trading, I would say honestly 95% of trading is your mental. It's your emotions. So if your emotions are not controlled properly, right? So one thing that really, really affects your emotions is how much money you're putting into the portfolio, how much money you're putting into a trade. Does that make sense? Like one thing that will really, really affect your emotions is how much money is in each trade. So if the trade has way too much money in your trade, right? Sorry, 1 second. So if any trade has way too much money in it, it's going to affect your emotions. Plain and simple. If you have 50% of your portfolio in a very, very risky day trade, your stomach is going to churn with every small little movement in the stock. We've all been there. We would just be looking at the chart, and it's just like, oh my God, oh, it's up, oh, it's down. You have to make it so that you do your best to take the emotions out of the equation. When you are trading emotionally, it does not bode well for your trading performance at all. It doesn't bode well for your trading performance. It doesn't bode well for your portfolio at all. So we all get anxious. We all get stressed. We all get that pit in our stomach when we put too much money into the trade. So one thing to do to fix that, lower the position size. If you lower your position size, you're able to have a much clearer head in terms of the trade that you're in. So if you're, you could be in a perfect trade. You could be in a very, very high quality trade setup. You could be in a perfect opportunity, perfect trade. But because you're in it with 100% of your portfolio, every small little move is going to feel like life and death. So you really don't want to put yourself in that situation. Does that make sense? So I could go way more in detail about all this stuff in future videos, but that, I hope, is a good little starting point. Michael Hicks, my anxiety spikes. It's a diagnosis indicator that I don't understand the trade well enough. Too much money. Yep, exactly. Trying to gain my confidence for silly mistakes and large positions. Yep. I know not much about it. Start, please. The guinea pig. You guys could get access to a trial to my Discord server in the link down below or in my bio. So, I guess the other thing that we can touch on to be a professional trader at first is you're going to want to realize that trading is not going to work out at first. It's not going to work out. It is going to take a very, very long time. Most likely, it's going to take a very long time for you to learn how to do it on your own. So if you're in my group, you don't really need to do too much thinking, right? But if you want to learn how to do this on your own, it's going to take you it's going to take you some time. So trading is actually one of the only things where you knowingly are going into it knowing you're going to lose money. Does that make sense? So you're basically setting yourself up knowing that, okay, I'm going into this, I'm going to lose money. What happens when a person loses money? They become very sad. They become very stressed. Sometimes they become depressed, anxious, right? So you have to be a bit of a cuckoo to go into this and understand that you're going to lose. And that's the part of the game. It's the same thing with starting any business venture, anything new. You're not going to be good at it at all at first. And you're going to be going into it knowing that you're going to suck. So that's one of the major issues with trading. Understanding that you're not going to win everything, understanding that you're going to lose because you're 100%. You're not going to necessarily lose everything, right? But you are, without a doubt, you're going to lose. So there's many, many people, especially very, very intelligent, analytical, logical thinkers. Trading never works for them. There's geniuses on Wall Street, genius level people that do analysis on stocks, the books. They are very, very smart. But they never become good traders. Why is that? It's because they've never accepted the fact that they will end up losing on trades and they can't overcome that mental barrier. So because they can't overcome that mental barrier, what these analytical and these genius, basically very, very intelligent people do is, and we've all grown up doing this, is we attach our self-worth to being correct. You cannot attach your self-worth to being correct in this game. You're going to be wrong. For example, when in school or in university or anything like that, right? In our jobs, if you're wrong about something, there's a detrimental impact on your grades or your work performance. Being wrong on the stock market is actually a good thing. So it really, really goes against our innate wiring, which is an issue, which is a very, very big issue for people. And that, for some of the smartest people I know, that is a very, very big issue, is they can't stomach the fact that they're going to be incorrect. That is a big, big hurdle that many people have. So please make sure you understand that there are idiots. There are really, really just dumb people making money on the stock market. Victory goes to the bold. It doesn't go to the timid. It doesn't go to someone who is passive. You need to understand that you have to attack this. You have to, day in, day out, don't take it personally. You're going to lose. You're going to lose money. And it's going to suck. You're going to feel pain. You're going to feel anxiety. But if you can't stomach $50 losses, $100 losses, how are you supposed to mentally stomach $1,000 losses, $5,000 losses? So you have to, it's a game of increasing your pain threshold for what you're capable of dealing with emotionally. That's really what it is. Anything business related, if you're able to deal with large problems, you will be able to achieve large results. Does that make sense? So you need to really, really wrap your head around. You need to really, really wrap your head around the fact that things are not going to work out at first, and that's okay. It's really okay. you just have to be patient. You just have to persevere. You just have to keep pushing forward. Thank you. No worries. Losses are like tuition. Yep, absolutely. Those who hesitate. Is this going to be a YouTube video after or only online? It's going to be a YouTube video after. It's going to be in the live section. 5K first loss. 5K destroyed me. Don't let it destroy you. It's a part of the process. But I'm glad that you're always here and you're always, you know, persisting. That's the thing. You just have to keep on showing up. You just have to keep on showing up. You just really have to continue showing up. And but yeah, man. You know, the main things that you would need to look at if you're a completely brand new fresh trader is you need to study up on technical analysis. You would need to study up on fundamental analysis, technical analysis, understand how news affects the market, figure out why certain things affects the market the way it does. Really jot down and really understand technical charting patterns. Figure out different technical indicators because those genuinely work. I know there's a bad rap for, oh, technical analysis doesn't work. Oh, technical indicators don't work. Oh, blah, blah, blah. There's hundreds of billions of dollars worth of funds and just algorithmic programs that buy and sell based on certain things occurring, based on technical analysis. So for anyone to say that it doesn't work is they're just shooting themselves in the foot. It just doesn't. They're just hindering themselves from making extra money because they have the premonition that technical analysis doesn't work. If you've been on my YouTube channel, you can definitely see how that does work. You know, the proof is in the pudding, honestly. Like, I have a high success rate because certain patterns consistently work and you're able to adapt, and I'm able to figure out why certain things work, why certain things don't work, or else I wouldn't have this consistent of a track record. It would just be a one-off thing, but technical analysis does work. Technical indicators, technical patterns, price action, support and resistance levels, these things work. So definitely need to study up on that at first. That's really important. And my signals are not delayed, and the indicator, I told that person not to use it on a 1 minute time frame, but he ended up doing it on a 1 minute time frame, and yeah, that's what happens. It is what it is, but the signals are not delayed. One or two people that are saying that they are, those are fake, and it is what it is. There's hundreds of people in my Discord server that can attest to actually making money. And if that was the case, you know, I wouldn't be showing my face here and saying otherwise, you know. But yeah, honestly, like I don't really know what else to say. I guess we'll take it one episode at a time. If you guys have anything else that you guys would want to go over, you guys could comment in the video afterward. But if you guys have any questions, feel free to ask. I would love to help for a little bit. And then, yeah. The Lion's Share. The Lion's Share. Really, really good name, honestly. The Lion's Share podcast. I like it because share, obviously, stocks, shares, right? And Hamza is my first name. And that is basically a synonym for lion. So the Lion's Share, it's like, oh, we get the, it's, I like the name. But yeah, anyone that is interested, there's a 7-day free trial. You have nothing to lose. There's a 7-day free trial for the Discord server for the TradingView indicator. And, the proof is in the pudding. You could clearly see once you join how well everything works, and you can make your decision from there. You have nothing to lose. You could cancel you could cancel at any time. What is your favorite indicator for options trading? So the main indicators that I use are, so my indicator on the 5 and 15-minute time frame are the best. I use that. I use the 8, 13, 21 exponential moving averages, the 10, 50, 200 simple moving averages, VWAP, Bollinger Bands, and support and resistance. Those are the main indicators and ways of technical analysis that I use. And I primarily look at the 1-minute time frame for my trading. So that's really how I trade. And that is, honestly, that's been working for me. Economic calendar, fear and greed index, VIX. Yeah, VIX, definitely have to be watching the VIX. Earnings calendar, economic calendar, absolutely. Max Pain, I don't really use that. But you could. Cheesehead, when will the next episode drop? Hopefully tomorrow. Hopefully tomorrow night around this time. Have to get a solid schedule, but so far, Tina, hello Hamid, how are you? You think Meta will see 700 soon? Most likely. Yeah. If the market is going to continue making highs, so it would only hit. I thought Meta was at 625. My bad. It's at 725. It could drop. So Meta's at 725 right now. It could drop, but overall the market is bullish, right? So if the market is going to continue being bullish, then it becomes difficult to short one of the winners. The only thing that could happen with Meta right now is if it decides to consolidate. Whether it might be able to drop below 700, but not a guarantee. I would be very, very, just in general, when there's a large winner like this, for example, this, or the weapons stock that everyone's talking about, I forgot the name, Meta, Netflix, the weapons stock, I forget, it's I don't remember what it is, but you don't really want to try to short winners. So just be careful, honestly. I hope it works out. If you're short Meta, I really hope it works out, but it's risky. It's risky. In a bullish environment, I would rather buy the dip on winners. Please say yes. But yeah, good first stream. Good first stream. Is there any other questions that I can help with? Is there any other things that you guys would want to hear about? I guess we could talk about geopolitics for a little bit. So for example, we saw how a few weeks ago how the DeepSeek information, how China released that $6 million AI tool that's basically better than ChatGPT. what you have to realize is that we're essentially, this is like the equivalent of the space race. So the space race between the Cold War, right? The US wants to maintain power internationally, technologically. So if the US begins to lose, right? NVIDIA dropped 20% in a day. If NVIDIA dropped 20% in a day versus China, there's no way that the United States would allow themselves to lose to China on the international stage via a new technology, which is AI. So China apparently only spent $6 million to build this technology. First of all, that might be a lie, right? You have to take that into consideration. They are in complete control over everything. They could easily lie. That's number one. Number two, even if they did, right? There's a discrepancy in how much money we spend on our technology. ChatGPT, Microsoft, Google, Apple, all these companies are spending hundreds of billions of dollars, tens of billions of dollars on this technology. If China only did this with 6 million, there's a large technological financial gap that needs to be filled. We have the money and we have the expertise, we have the chips to do it as well in NVIDIA. So you have to realize there's no way that the United States is going to allow themselves to look like fools on the international stage. From a business standpoint, it would just be very, very bad. Because it would give more vigor and authority to enemy states. The United States is not going to allow that to happen. So just keeping in mind, if India, for example, launches an AI company, or if India, or if one of the European countries gets their act together, starts doing something in AI, European countries have been completely just lagging in terms of technology, in terms of any sort of, like improvement to anything. It's just really, I don't know what's going on in Europe, but so if one of like the European countries, or if India, or if like an Arab country, or if Russia releases some sort of AI technology, just assume and we get like a 20% drop in NVIDIA or a 20% drop in some company where it's like, oh wow, there's a competitor. Don't fall for it. It's just BS. Like, there's no way that the United States is going to allow themselves to look dumb on the international stage, basically. Yes, it is possible to be financially well off with trading. 100%. Thank you. Yo, I'm joining your Discord. I really like you. Thank you, Tina. Tariff. The inverse relationships are VIX. Yes. The dollar yields have not really been working as inverse as they usually would, but the VIX is definitely working as a good inverse. Tariffs. So that's another thing. Tariff news is definitely going to affect the overall market consistently as well. That's fun. That's the fun part about all this. We don't know for sure how long, anything can change, especially when in the first few months of Trump's presidency, anything can change. Like any single thing daily. Oh wow, we have tariffs on Mexico. Oh, tariffs are lifted. We have tariffs on China. It is what it is. You don't really know for sure. You are one of my favorite channels. Thanks, Nick. Malvin. Yes, this is going to be a thing for now. Yep. The Lion's Share Podcast, Episode 1. Drop some more questions, guys. Please let me know of any other questions you guys have. Yina, can you explain a bit how you use fib levels? How to decide where to draw the bottom and the top? So primarily what you want to do with fib levels is you want to take it from the wicks of the candle. You don't want to take it from the bodies. You want to take it from the absolute highs of the candle to the swing lows. So you want to look at it on a weekly or a daily, depending on what time frame that you're trading on. You want to take it from the highs to the lows. So essentially you just connect it from the highs to the lows, and that's how you get really, really solid fib levels in the immediate term. Gold has reached almost 3,000. Do you think we were going to head over that price? The issue is that I definitely would not want to be long gold newly here. If you did want to go long gold, for a trade wise, like 28. For a trade wise, like 28.70, 28.80 would be the level that you would want it to see hold. But we're on a tear right now on gold. Gold is just skyrocketing almost in a vertical line. So just be careful. If you did want to go long, now is usually not really the time that you would want to go long, Can you explain how you use Bollinger Bands? So basically with Bollinger Bands, I look at Bollinger Bands on a daily and a weekly time frame. And when a large tech stock or the S&P 500, the NASDAQ, the IWM, when they're trading outside of the lower level of the Bollinger Band, it becomes a much easier opportunity to go long because mathematically, price wants to return back inside the Bollinger Band. So if price is below the Bollinger Band, which is mathematically the standard deviation away from the middle line, right? It wants to revert back. So when these large tech stocks that are algorithmically driven are trading outside of the lower level, it becomes very easy to just go long. So Bollinger Bands on those time frames are some of the easiest trades you could really take. So I love it, to be honest. Be more active in building a long-term portfolio. Have any suggestions? No, not that I could think of. You like that 3 for 3 I got today using your trading file? Wow, nice. Thank God. Certified, yo, you live. I love it. Yes. Thank you. No worries, Dr. 52. AJ, could you go over how you would trade Tesla and its recent actions, and also what your thoughts are for it going forward? So for Tesla specifically, we were short Tesla from 386, and then we covered this morning at 330, and then we ended up going long. So primarily what I like to do for my swing trades, regardless of how much lower Tesla can go, sure, it can go lower, but this is really just the point where I think people are going to cover because we've gapped down so low. For someone to chase shorts down here is not safe at all. And I really, really do think that Tesla should find some sort of a bottom here. Apple is also starting to really bounce. So Tesla and Apple generally are like a pair. Other stocks move as well. So yeah, I would just be very, very surprised if Tesla just continues capitulating. We dropped... How much did Tesla drop? Percentage-wise. Yeah, Tesla dropped like 17% in the past like 10 days. So it's, if you want to be really, really serious about this. Yeah, 17% in 8 days. So this is not like a time where you would want to start shorting aggressively. Does that make sense? It could work, but just thinking about it logically, like it's really not a point where it's safe to go short. And because it's not a good spot to go short, in my opinion, the opposite tends to be true. So it becomes a better time to go long, in my opinion. And that is generally a really, really good framework that you should have when you're swing trading. So Tesla just fall out of lower. Doesn't make exactly. Like because it's so overextended to the downside, not only in price action, in terms of percentage loss, but also because it's outside of the Bollinger Bands to the downside, it becomes so much easier to go long. So, yeah, absolutely. Great point. Great point. You know. But yeah, guys, I guess this was a good first episode. If you guys have any topics that you guys would want me to go over, please feel free to drop a comment below. Maybe send me a message on Instagram or in the Discord as well. If you guys want some sort of topic that you guys want me to go over, please feel free to let me know. Send me a DM on Instagram or on TikTok or in the Discord. But yeah, man, I hope the quality on everything was also good. I hope the mic quality and all that stuff was good as well. But yeah, man, I enjoy it. I'm hopefully going to be doing this a couple times a week. And it should be fun. The Lion's Share podcast. Should be a fun experience. So we're just getting started. So whoever's watching this 5-10 years down the line, hello from the past. Things are just getting started. So if you're watching this now, things are going to be fun. So hopefully in 5-10 years, when everyone watches this again, we're all going to be professional, awesome traders. And we're all going to be living on beaches somewhere, just trading for, who knows if we're even going to need trading. Who knows? We're just going to be living off our investments and our property and stuff. Who knows? But yeah, it should be fun. It should be very, very fun. Just realize that trading is not going to work out for you overnight. It's going to take time. It's going to take a lot of effort. And you're going to need to go through a lot of pain. So if you're willing to do that and you're willing to push forward, then you could make it work. But if you think it's going to be a straight shot where you're going to make a lot of money and be successful overnight, it's not going to work out. So I hope you guys enjoy. I hope you guys have a wonderful week, man. I hope you guys have a wonderful life. And I will be in the Discord server tomorrow morning, bright and early. So I hope you guys enjoy the rest of your night. All right. Love you guys. Have a good one. Thanks for tuning in.